watching Businessworld Live. I'm Danny Laurel.
And I'm Jess De Los Santos. Here are the biggest stories to kickstart this trading day Wednesday. The International Monetary Fund upgrades its growth forecast for the Philippines this year.
A Japan-based debt watcher affirms its investment grade rating for the Philippines as the economy continues to recover from the pandemic.
Landmark deal. PLDT sells nearly 6,000 of its towers to two foreign companies for more than 70 billion pesos.
And vehicle sales rise by more than 40% in March, marking their highest monthly sales since the start of the pandemic. We begin our broadcast with the International Monetary Fund upgrading its growth forecast for the Philippines this year.
And this projection is the fastest among 5 economies in the ASEAN region. The multilateral lender expects the domestic economy to grow by up to 6.5% this year, up from the initial GDP outlook of 6.3%. This is higher than forecast for Vietnam, Malaysia, Indonesia, and Thailand. However, the upgraded forecast remains below the government's target of 7 to 9% for 2022. The IMF cites the impact of the war in Ukraine, saying this will set back global recovery, slow growth, and drive inflation faster. For this year, the lender expects the global economy to grow by 3.6%, lower than its previous forecast of 4.4%.
Japan-based Rating and Investment Information, or R&I, maintains the Philippines' credit rating at BBB+ with a stable outlook. R&I says this is because the country's economy has been showing solid growth since the second quarter of last year, that despite new waves of COVID-19 infections. However, the debt watcher warned that soaring oil prices will continue to drive inflation higher, which could cause the current account deficit to widen this year. The country's debt-to-GDP ratio hit a 16-year high of 60.5% last year. This is slightly above the 60% threshold considered manageable by multilateral lenders for developing economies. R&I last affirmed the Philippine sovereign rating in April of last year.
Now, on the corporate front, PLDT has generated 77 billion pesos in a landmark sale and leaseback deal with 2 international telco tower operators. Smart Communications and Digital Mobile sold over 5,900 telco towers to subsidiaries of Edotco Group and EdgePoint. These sold assets comprised almost half of PLDT's tower portfolio, making it the largest ever asset acquisitions by foreign investors. Proceeds of the sale will be used primarily by PLDT for debt prepayment, fund major cash requirements this year, and special dividends of up to 9 billion pesos. The DICT also lauded the move as it will support the department's goal to improve tower density, which leads to improved connectivity.
The DICT is very elated about this transaction because the available towers because of this transaction, there are additional almost 6,000 currently operating towers that will form part of the common towers that are being regulated.
Part of the objective is to be able to manage the cost of operating these towers moving forward, right? So the big win is really the ability of PLDT to dispose of these towers. In the first instance, to realize significant gain on the books flowing from the price to the net book value, which is something in the order of around 50 billion.
Now, until September this year, BPO firms in economic zones are allowed to have 30% of their staff work in hybrid mode. That's after much push and pull from stakeholders. How is this going to affect the outlook for the office sector? Let's get insights from Joey Bondoc, Associate Director for Research at Colliers Philippines. Good morning, Joey. Thank you for joining us today.
Morning, Jess, Danny.
Okay, again, to that report, PEZA approving the 70-30 work mode here for BPO firms in economic zones. I mean, of course, this is still going to be an improvement compared to last year when only 10% of the workforce is required to work on site. But nonetheless, how is this going to affect the office sector?
Well, this will have a positive impact on office space absorption. I have to note that even during a work from home arrangement, the implementation of the work from home scheme, a lot of BPOs are actively looking for office space across Metro Manila. Some of them looking for swing space or temporary spaces until they eventually occupy a bigger space. Now that these companies are mandated to work on site, of course, this will not just have a positive impact, multiplier effect on the economy, but this will have a direct positive effect on office space absorption. You have to note that we are projecting about 900,000 square meters of office space to be completed in Metro Manila for 2022. That's a lot, and these companies have a lot of options, and BPOs continue to lead take up absorption of new office space across Metro Manila. More than a third of office space demand is coming from these BPO companies. So that will definitely have a positive effect.
Okay, Joey, now this scenario is for the PEZA buildings, diba? But it's not a surprise here that IT-BPM firms, especially the employees that have moved to the provinces, that have moved out of these central locations, are saying we don't want to ever go back. And there are a lot of calls from the CCAP, from IBPAP saying, well, let's let the companies choose the requirements of these people. How would that affect the demand for office space?
Well, outside of Metro Manila, unsurprisingly, we still see a very good level of demand. So you have the likes of Cebu, Iloilo, Pampanga that continue to drive office space demand across the country outside of Metro Manila. But, outside of the PEZA proclaimed spaces, we still see a very good demand for office buildings. You have some companies taking the BOI route, meaning looking at the BOI proclaimed or accredited spaces. And of course, they want to take advantage of the tax and non-tax perks granted by the government. So whether it's in a central business district or in a fringe location, similar to what we see in Metro Manila, these companies continue to occupy a lot of office space, a significant amount of office space. Even you have to note that in 2021, 81% of total transactions across the country came from Metro Manila, about 20% coming outside of Metro Manila, and dominating the demand are the likes of Cebu, Pampanga, Iloilo. There's a lack of office space in Iloilo right now. So really a lot of companies have been looking at countryside developments, and these are top locations.
Okay, Joey, moving away from BPO sector, what about all the other industries? Have they gone back to work? Is this, pace of reopening and going back to normal as you've been expecting, faster than what was expected? Have you changed up your projections because of this new hybrid system of working?
Well, at Colliers Philippines, for instance, so we are walking the talk, and we're slowly, gradually returning to office. But for other industries, they are also returning to office. I mean, they are testing, for example, the 70-30 limit, 70% working from home, and then 30% now working on site. Danny, when we had our last presentation, we did an informal survey, a poll, and about 100% of our respondents said that upon implementation of on-site work, they will mandate 75 to 100% of their employees to start working on site. So definitely we will see more companies that will test this work from or on-site reporting. And in fact, in 2022, we started to see that, but there will be a more pronounced implementation of on-site work definitely for the remainder of 2022. A lot of industries have been implementing that.
Now, Joey, earlier we were talking about economic zones, but there's a current moratorium still in place, Administrative Order number 18, that limits the establishment of economic zones in NCR. How is this going to affect the office space market, particularly in NCR? Of course, the AO 18 is meant for rural development, but technically, how is this going to impact this sector's outlook?
Well, just Colliers Philippines, we have always been calling the government to lift AO 18 because we believe that as the demand for office space recovers, picks up, there will be a greater demand for PEZA proclaimed office spaces. We have to note that POGOs, which have vacated a substantial amount of office space, they also vacated some PESA proclaimed office space. So the lack of tenants from the POGO sector now will somehow be filled by the BPO companies that are looking for vacated PESA space, still a PESA proclaimed office space. But again, will this be enough? The question is, will that be substantial moving forward? As you know, we see a greater demand for these BPO companies, and there will be an improved appetite for PESA proclaimed spaces, definitely. So we believe that there should be more PESA proclaimed office space in Metro Manila. Well, not just in Metro Manila, but even outside of the capital region. As I mentioned, there's a very big demand for PESA proclaimed office space. In fact, for office space in general in Iloilo. So really a lot of interest for these spaces.
Now, Joey, you touched on this earlier a bit. I mean, much development here, much expectation, especially for Pampanga. Why are you that bullish on the Bulacan-Pampanga corridor? I mean, this is not exactly new. This, of course, there's been much expectation on the north or central Luzon areas. But what makes it different this time around?
It's the rise of the North, Jess and Danny. If you look at Bulacan, you have the likes of MRT7 that will be completed 2022. You have the Mega Manila Subway, which of course will have a positive impact on Bulacan. In Pampanga, you have the expanded Clark Airport. So you see a lot of developers starting to build condominium projects in Pampanga, Bulacan. In fact, I would even think that right now they are aggressively land banking because they want to take advantage of the opportunities for the leisure sector, especially once it rebounds the latter half of 2024. So more leisure-oriented developments in northern part of Luzon. And definitely we should keep an eye on Bulacan and Pampanga, rise of the north, as we always highlight.
Finally, Joey, linking this to markets, no, we're anticipating the 7th REIT that's going to be Vista Land soon enough. And tell us, how has the reinvestment opportunities from people like us investing in these REITs to own a part of these commercial assets, to own a part of these retail assets, how has this changed the industry so far?
Well, it has really redefined the way Filipinos invest. But, for REIT, I would say in general, we see a lot of opportunities because not just for the office market, but overall for assets that generate recurring income. So aside from office, which is, of course, one of the most stable property markets, you have the likes of malls. We are seeing consumer traffic or foot traffic reverting to pre-pandemic levels, 60-70% according to some mall operators. So that is a good asset that can be divested into REIT moving forward. You also have toll roads, infra projects, perhaps hospitals and hotels in the future. Of course, you have warehouses and industrial parks, and industrial sector is one of the most stable segment. Even despite the pandemic, it is a pliant sector amid a new COVID variant, as we also noted in our previous report. So definitely it's an exciting landscape for REIT here in the Philippines, and it will really make the property market more dynamic, and investing will be more exciting moving forward.
All right, thank you so much for that update on the
Thank you.
property sector. That was, of course, Joey Roy Bondoc, Associate Director for Research over at Colliers.
Here are the other headlines we're keeping our eyes on. The country's balance of payments position swung to a surplus last month. This was driven by foreign currency deposits from the national government and the BSP's Investments Board. Data released by the central bank show that BOP recorded a $754 million surplus in March. This is a turnaround from the $73 million gap the same period last year, as well as the over $150 million deficit in February 2022. This is also the biggest BOP surplus since the $991 million surfeit in December.
Now, the Trade Union Congress of the Philippines wants to increase the daily minimum wage in Central Luzon to 820 pesos. In its petition, the TUCP said that the current 420 peso daily wage in Central Luzon is no longer sufficient to provide workers a decent living. The union added that the region's current daily wage was set almost 3 years ago when the Regional Wage Board granted a 20 peso increase. The TUCP said that the minimum wage in Central Luzon puts earners and their families well below the poverty threshold of about 16,000 pesos per month. This as the current minimum wage implies a monthly income of just below 11,000 pesos.
The country's agricultural trade deficit widened 40% year-on-year to nearly $9 billion in 2021. Data from the Philippine Statistics Authority show that the total agricultural exports jumped by 9% to around $7 billion, while imports also increased by 25% to more than $15 billion. The deficit widened as the Philippines imported more agricultural products to address increased consumer demand after the economy reopened. Among the commodity groups, cereals accounted for the largest share of agricultural imports by value at $3.15 billion. Coming right up after the break, GT Capital marks its 10th listing anniversary on the local bourse.
More of that and other stories when Business World Live returns. Stay with us.
still watching Businessworld Live here on One News. I'm Jess De Los Santos.
And I'm Danny Laurel.
All right, now let's kick off with how our biggest telco player is doing on the back of that landmark sale.
Right, Jess, straight on to PLDT, and you can see that on my terminal here, jumping 11 pesos on the back of that 77 billion pesos sale of its towers. That was, of course, the largest ever acquisition of assets by any international investors. They will be using the proceeds to fix their balance sheet. Meanwhile, you've also not just got PLDT, so that's, of course, up by 4.3% already as of the past 3 days. But you've also got the likes of Converge, for example. That was the rose as much as 4.5%. Yesterday, it's now up by 0.1%. Close to 1%. That's on the back of COL Financial saying that there might be a possibility the stock could be included in the MSCI indices in the next rebalancing. Now, recall that they previously failed to join the MSCI index in November because it had low foreign free float market, but they are saying maybe some foreigners are coming back in. Another one that might be benefiting from that is Globe Telecom as well as PLDT. Those two may see their weightings in the MSCI raised as they benefit from this foreign fund inflow. Now let's take a step back and open and check in on how our markets are doing. Just this hump day, take a look at that. Our local bourse up by 0.6%. Our index firming by 7,079. So, a little bit of positivity here. And you can see all across the board, specifically property firms. We had Joey Roy Bondoc earlier on from Collier saying the sector is looking pretty bright. That is up by 0.8% this morning. And just one celebration that I wanted to pull out for here, that is GT Capital trading up by 5 pesos and 50 centavos. This, as the PSE actually celebrated 10 years of the listing since, of course, 2012 today, Jess.
Okay, Dan, something to keep an eye on, though. New strands in oil exploration. This time, the Department of Energy seeking the cabinet cluster's green light for oil exploration in the West Philippine Sea. How are those stocks moving?
Very interesting, Jess. So, it's been... Is it going to happen? Is it not going to happen? But we do have this report from the Philippine Star, which is citing Martin Andanar, who is, of course, the acting spokesperson of President Rodrigo Duterte. He said that the nationals, offshore and oil gas drillers, the Energy Department, because of that pressure there, has asked the cabinet cluster to immediately allow the exploration over in the West Philippine Sea. So, of course, right now, it's still in limbo, and you do have the likes to be watching out for PXP Energy. It's trading flat this morning, but you do have other companies such as, Philex Mining is also part of that, Apex Mining as well, and other explorers like Petro Energy and Atok Big Wedge. The mining and oil counter seems to be the only one in the red, strangely, just this morning, trading down by 0.05%.
In other news, Manila Water has signed a Memorandum of Understanding with Enterprise Singapore, or ESG, to pursue technology exchanges. The partnership will involve water technology test deployments by Singapore companies in the East Zone as well as outside Metro Manila. ESG is an arm of Singapore's Ministry of Trade and Industry. Meanwhile, the water concessionaire is also eyeing to enforce what they call enhanced cost discipline this year as it undertakes major projects. Major projects that the company is currently undertaking are the Wawa Kalawis Water Treatment Project in Antipolo and the East Bay Water Treatment Plant along Laguna Lake.
Local car manufacturers achieved their highest monthly sales since the pandemic, rising by 43% in March. Now, a joint report by Campi and TMA showed total vehicle sales reaching over 29,000 units in March from just a little over 20,000 units a year ago. While passenger sales dipped slightly year on year, commercial vehicle sales accelerated by about 64%. This comes after Metro Manila and 38 other areas moved to the most lenient alert level status last month. Toyota Motor Philippines remained the market leader in the first quarter of the year with a 49.8% share.
A rural bankers group says regulatory reforms that will require bigger capital for rural banks may be detrimental to small lenders affected by the pandemic. Last month, BSP Governor Ben Jokno said they are in the final stages of reviewing the minimum capital requirements for rural banks, taking into account that a strong capital base will be crucial to address challenges faced by the industry. The Rural Bankers Association of the Philippines note that a higher capital requirement would encourage mergers among small lenders. Although the group agrees that mergers can lead to stronger banks, they said the timeline for the measure's implementation should be carefully reviewed. The group urged regulators to consider that smaller banks are in need of extraordinary support from the government amid the pandemic. The minimum required capital for rural banks starts at 10 million pesos up to 200 million pesos depending on the location and the number of branches that will be set up by lenders. And that's a first look into the business day this Wednesday, April 20, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jess De Los Santos.
And I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.